Hello again, this is Alex with MasterChartsTrading.com. This is a market recap for Friday, December 28th, 2018. This is a last recap of 2018. Happy holidays, everybody. Hopefully you had a good year. I had a good year. Donate some of the money to charity. Donate some of the money to people who are less fortunate, or perhaps to even animal shelters or something like that. So we'll go back to our usual programming. Again, stocks run into resistance. We'll look at 4-hour charts. The daily resistance is pretty close. We'll look where the short-term and the conservative short sellers might want to sell the Dow Jones and S&P 500. We'll look at yield curve, which continues to flatten. This is not a good sign for the general market. The rest of the world obviously is rebounding as well, together with S&P 500. We'll look at gold and dollar. They may be signaling something bigger to come. Natural gas and oil. And then finally we'll cover cryptos as usual. So let's look first at the S&P 500 futures, and let's immediately look at the 4-hour chart. So the 4-hour chart here is the S&P 500 ES1 exclamation point. On this chart you can see that I have my own indicators, trading indicators, MasterChartsTrading.com, and I'm talking about this yellow, red, blue, and green lines. They are mathematically calculated, they're not drawn by free hand. So on this chart of the 4-hour S&P 500 futures, I wanted to show you previous price action from December 12th here, where I'm hovering. You can see the downward facing arrow, and this is one of the better places to short S&P if you were an intermediate term trader, for a very nice move down. If you trade futures, you know this is a very large move. I wonder if we're getting ready to do something of similar nature. We can see that excuse me, the price is coming up to this red line, and you can see that for example, even today this candlestick looks like a shooting star candlestick. You can see that prices tried to rally above, but then sold off by the end of the session. So on the 4-hour chart, this sure as heck looks like we're about to roll over. Now on daily charts, we can see daily charts. So this is that arrow that I just put there on a 4-hour chart, but you can see that on daily chart the resistance is slightly higher at 2553, where I'm hovering right now. So this is a very good place for short sellers to begin to attempt to push the prices lower. On the Dow Jones Industrial Average, here's Dow Jones Industrial Average, this similar levels correspond to 23,677, so about 23.7. Again, this kind of makes sense. I think if we are of the assumption that we are in a bear market, S&P 500, the stocks in general are in a bear market, then we should be looking to do the opposite of buying, which is selling, or placing bearish bets. So how do you place bearish bets? For S&P 500, you can buy inverse ETFs such as SH, or you can buy puts, or if you know what you're doing, you can sell calls. If you don't know what you're doing, don't do that. The bullish levels, in my opinion, are higher, around 271 for S&P 500 ETF SPY. Notice that we had consistent failure there. Finally, we just unraveled here on the beginning of December. So we had a couple of, actually 1, 2, 3 potential breakouts, and they all failed, and finally we just collapsed. The pattern that I kept referring to, this W-type pattern, so you can see this where I'm hovering, W-type pattern, and the depth of this W-type pattern, let me just show you how much it was. It was, you know, about 7.6, maybe 8%. So following the breakdown on 14th of December here, we more than achieved the target, and you can see we broke down even further to about 10% down. So now we're seeing a rebound, which is a normal thing, and I think it will carry this rebound to the red indicator line. Again, you can find out more about these indicators at MasterCharts Trading and then sign up there as well. So I already showed where the bears would come in, conservative short sellers. Conservative short sellers would come in most likely around 2553. And most stock sectors rebound from oversold levels. So yeah, this is pretty much it. So we can look at technology, for example, XLK. Yeah, very oversold, so rebounding. I don't know, we can do XLI, industrials, also rebounding. XLF, financials, rebounding. They're all the same. If we look at some of the foreign markets, VGK, you can see the rebound is very feeble. We haven't even gotten to the yellow line. Emerging markets, EM, haven't even gotten to the yellow line. So a lot of still rebounding to do. And another major market, of course, is Japan, still trying to get anywhere. So we basically just need to look and focus on pretty much one chart, you know, either Dow Jones or S&P 500, and just make our decisions based on that. And I think the general stock market worldwide is in a bear market, so we should consider placing bearish bets, shorting stocks. But if you happen to have some holdings, then I would consider, like if I had any holdings, I would consider unloading them and on any significant rebound. So you can see that I already changed my allocations to 100% cash. Although lately I've been kind of nibbling at the bonds. So in fact, let me show you some of the bond action. So first, let's look at the actual yield curve. This is a dynamic yield curve, and it's a free tool. You can find it at MasterCharts.com. You can look up under free tools. So here is the yield curve as it was on November 2nd, 2018. You can see I'm hovering right there. And you can see that this is a relatively normal looking yield curve with a short-term yield being lower than the longer term yield. So I'm now going to advance you know, a few days at a time. You can see the yield curve is changing, and you can see that it is flattening. In other words, the short-term yield is becoming more and more similar to a longer-term one. So you can see that the yield curve has flattened somewhat. It hasn't yet inverted, and as I noticed, as I pointed out a few times before, during, or rather right before a bear market set in, for example here in 2007, you can see that the yield curve was actually inverted. In other words, it took more money to borrow at short term than at long term. The same kind of general scenario occurred around the top in year 2000. You can see the short-term yields were very high. So we're not yet there, but we're definitely getting there, as you can see that the yield curve is flattening. How does that translate into action on bonds? So if yields are dropping, bonds are gaining, and you can see that, for example, today here, TLT, you can see it closed above this blue line at 121.03. Again, those lines are not drawn, they are mathematically generated. I actually have a position in TLT, so I am beginning to reallocate some of my holdings towards bonds. Also, shorter term bonds. Here's BSV, short term bonds fund. You can see we're approaching the breakout levels as well. So I would be watching for a breakout pretty soon, actually. So what this means is, again, the yield curve is dropping, is flattening rather. The bonds are dropping, or rather the bonds are gaining in price, and at the same time the stocks are under severe pressure. When stocks are under pressure and bonds are gaining in price, this is a classical situation of a flight to safety, where investors are really not looking to return, on a return of principal, or rather return on the principal. They're trying to look for a return of the principal, and bonds is a safer place to be in general because of the less volatility and a decent yield. So with bonds gaining, stocks dropping, the posture is, in my opinion, shifting, and we need to be cognizant of that. Usually, let's continue to gold. So, let's say UUSD gold. You can see that really big rally here of the November lows. Here in December, beginning of December, I thought we were going to start dropping. Actually, I did not feel like this candle here on the 5th of December was strong enough to warrant a short entry. Here on 26th of October was pretty obvious, it's kind of like a shooting star, and then a close below this red line. Again, you can find out more about this at MasterChartsTrading.com. But right now we don't have enough bearishness in gold, and gold just keeps rising. So I think a breakout above this blue line at 1280, 1290 or so, I think it could be a reversal that is coming to gold. By extension, you can see dollar DXY still obviously in an uptrend. You can see it's still obviously in an uptrend because there's a fresh highs. We're not even remotely coming down towards anywhere bearish levels. You can see bearish levels at 91.8 points. So still quite a ways to go for the dollar. But the way gold has been acting, I am now trying to figure out if it is trying to tell us something. Now, normally gold and dollar, this is gold and US dollar plotted on the same graph, and this is a weekly chart going back to 1979. So there's quite a bit of data here. Now in the bottom pane here we can see a correlation coefficient, and this is a 20-week correlation coefficient. In other words, where is gold and how is gold and dollar correlated? And usually they are correlated negatively. In other words, if dollar goes up, gold comes down. Of late, both have been kind of trading up. So dollar is going up and gold has been going up as well. So you can see that the correlation coefficient is spending its time in the positive territory. Now again, normally this is a not normal relationship. Most of the time the correlation is negative. So now we will need to watch gold pretty carefully and see if this breakout is a true breakout, or and additionally if this breakout means that the dollar as well will be reversing soon, and gold is sending a kind of like a signal to dollar that dollar will be reversing to the downside. It hasn't yet happened, but there is now an interesting possibility of this. So we're watching this graph very carefully. All right, natural gas and oil. So net gas. See a potential breakdown here. You can see a close below the red line. Again, find out more about these indicators at MasterCharts Trading. So to me, this is a significant development, and I think we could see a move down towards $3 here. And oil, US oil, I read some people are already buying oil. I don't see what for, because I think it is in a downtrend, and for me to become interested in buying, we need to see a significant rally to above this blue line. This obviously hasn't happened, so we need to either avoid oil or potentially short oil. So right this instant I have no position, but we actually traded oil to the downside, and alert was sent to my subscribers here on the November 5th, which was a very nice gain. If you trade futures, 30%, or actually more than, this is a 32% drop. And you know that this is a very sizable gain, especially if you trade futures or options. So overall, I think oil is still in the downtrend, and we should trade it accordingly. Finally, let's finish off with cryptocurrencies. So you can see that there was a potential opportunity to short, but this is an aggressive type of short. I personally don't like it. I like to see a bigger bounce towards the red line. So this red line for Bitcoin right now is 57.55, and it's possible maybe it is bottoming. So maybe we'll see a move higher. You can see that Ripple XRP USD did sort of a similar thing, but the price actually carried it higher towards the red line as well. So potentially we're seeing a breakout in the making, but we'll need to watch it again pretty closely. Alright, that's it for this week's recap. I forgot to mention to please like the video, please share this video with others. If you have any comments, make a comment below. If you have any questions for me in private, you can also send me a chat, a private chat here on TradingView. You can click where I'm hovering and send me a chat. I am on TradingView as at MasterCharts. MasterCharts right there. So you can find out more about the indicators, and I'm talking about the long and short indicators that you can use to trade on your own. And I'm talking about this yellow, red, blue, and green lines that you can get on your chart by simply signing up at MasterCharts Trading for one of the access that have the indicators, one of the packages that have indicators in them. And also I sent alerts in my daily newsletter, and those alerts also are quite useful because you can make money, but you can also avoid losing money. For example, here's a good example of where to exit and at the very least avoid losing money. Here's an actual alert to my subscribers to avoid S&P 500 on December 17th. Alright, that's it for this week's recap. If you have any questions, send them in. Thanks for watching. Have another great trading week. Bye-bye.